Oil, the lifeblood of modern civilization. It fuels our cars, powers our industries, and underpins global trade. Oil price fluctuations send ripples through the global economy, impacting everything from the cost of groceries to geopolitical alliances. The past 5 years have witnessed unprecedented volatility in the oil market, driven by a confluence of factors. Technological advancements, geopolitical shifts, and evolving environmental concerns have all played their part in shaping this new era of oil price uncertainty. The shale revolution in the United States transformed America into an energy powerhouse, upending traditional power dynamics in the global oil market. By understanding these dynamics, we can better navigate the uncertainties of the energy landscape and prepare for the challenges and opportunities that lie ahead. The United States, once heavily reliant on oil imports, has undergone a remarkable transformation over the past decade. The advent of hydraulic fracturing, or fracking, unlocked vast reserves of shale oil and gas, propelling the U.S. to the forefront of global energy production. As American oil production soared, it reduced U.S. dependence on foreign oil and created a surplus in global supply. This increase in supply, coupled with slowing demand growth in some parts of the world, put downward pressure on oil prices. OPEC, the cartel of oil-producing nations, found its influence challenged by the surge in American shale production. The stage was set for a new era of price volatility, with multiple players now vying for market share. The United States, once beholden to oil-rich nations in the Middle East, gained greater leverage on the world stage. This newfound energy independence allowed the U.S. to pursue a more assertive foreign policy, particularly in regions like the Middle East. Oil has long been a weapon in the arsenal of nations, used to exert political pressure and advance strategic interests. The past 5 years have been no exception, with geopolitical tensions frequently spilling over into the energy market. Disruptions to oil production and transportation routes in the Middle East have sent shockwaves through global energy markets. Sanctions on major oil producers like Iran and Venezuela have also contributed to supply disruptions and price spikes. The growing rivalry between the United States and China adds another layer of complexity to the geopolitical landscape surrounding oil. In the midst of these geopolitical and technological upheavals, OPEC has struggled to maintain its grip on global oil prices. The rise of U.S. shale production, coupled with slowing demand growth in some parts of the world, has made it increasingly difficult for OPEC to control prices through its traditional methods of production cuts. The cartel has been forced to adapt to this new reality, often engaging in delicate negotiations with other oil producers, including Russia, to manage output levels. These negotiations have not always been successful, leading to periods of both oversupply and undersupply in the market. In 2020, a price war erupted between Saudi Arabia and Russia, sending oil prices crashing to historic lows. The future of OPEC and its role in shaping global oil markets hangs in the balance. While supply-side factors have undoubtedly played a significant role in shaping oil price movements, demand fluctuations have also been a major driver of volatility. The global economy, much like the oil market itself, is prone to cycles of boom and bust. During periods of economic expansion, demand for oil typically rises as businesses ramp up production and consumers increase their consumption of goods and services. Conversely, economic downturns often result in a decline in oil demand. The COVID-19 pandemic in particular had an unprecedented impact on global oil demand. Lockdowns and travel restrictions imposed by governments around the world brought economic activity to a standstill, causing oil demand to plummet. This unprecedented demand destruction led to a historic crash in oil prices, with some benchmarks even briefly trading in negative territory. As the world grapples with the urgent need to address climate change, the transition to cleaner sources of energy is gaining momentum. The rise of renewable energy sources, such as solar and wind power, and the growing adoption of electric vehicles pose a long-term challenge to the dominance of fossil fuels, including oil. This shift towards cleaner energy sources is likely to accelerate in the coming years, driven by a combination of government policies, technological advancements, and growing consumer demand for sustainable products and services. While the rise of electric vehicles is expected to reduce demand for gasoline, it is also important to consider the growing demand for petrochemicals used in the production of plastics, fertilizers, and other essential products. The future of oil demand will depend on a complex interplay of factors, including the pace of technological innovation, the stringency of environmental regulations, and the evolution of consumer preferences. The past 5 years have been a roller coaster ride for oil prices, characterized by unprecedented volatility and uncertainty. A confluence of factors, including technological advancements, geopolitical upheavals, shifting demand patterns, and the rise of renewable energy sources, have conspired to create a complex and unpredictable energy landscape. The shale revolution in the United States upended traditional power dynamics in the global oil market, while geopolitical tensions in the Middle East and elsewhere continue to threaten supply disruptions. OPEC, once the dominant force in the oil market, has struggled to maintain its grip on prices amidst these shifting dynamics. Looking ahead, the outlook for oil prices remains uncertain. Geopolitical risks abound, with the potential to disrupt oil production and transportation routes. Navigating this volatile future will require a deep understanding of the complex interplay of factors that drive oil prices. The challenge then is not to predict the future, but to prepare for it.